Welcome to this week's live ASX strategy session. Great to have you with me. Thank you for joining me. Lots of interesting things to go through today. A whole lot of movement happening in the markets. Going to start off with the ASX 200. Got copper, gold, oil, uranium to look at as well. I'm also going to include the US indices in this session. So a bit to go through with that also. And also have your stock codes ready for the end of the session. So we go through any stock codes you want to have a look at, see what the technical structure on those looks like. So that's always very interesting to do that. And a couple of stocks I've got for you as well. So yeah, it should be a pretty full strategy session today. Okay, now everything today, general commentary only, doesn't take your personal situation into account. Having said all that, I think it's time we get straight into our charts. So starting off with the ASX 200. And so the pullback in the ASX 200 has gathered pace over the last couple of days. Prices are now back below the 50-day moving average, and they're also breaking below this support zone, which is in here around 8,100. So this marks three high points from earlier in the year and also held some lows in more recent months. The prices have dipped beneath that. They're actually now down around the 100-day moving average. So what does this all mean? Is this a significant turning point, and is there more to come? Well, I'll come back to that in a moment, but just looking at what we spoke about last week. The focus last week was on this quick reversal. Had the all-time high, had a quick reversal from that October high, and we spoke about that as being a sign that there was more consolidation to come. Now, the fact that the reversal retraced most of October's gains. So here's the October low, nice rally, but then that reversal retraced most of the gains. The fact that the pullback did take away much of that prior upside, that was really a sign that there was more to come, and that's what we're seeing now. We're seeing the more to come part. The scenario which I was thinking about last week, which I told you about, was that I thought maybe the more consolidation to come might have been sideways price action above support. Let the moving averages catch up. That would have been a sign of strong buying interest if we had the dip underpinned and prices were able to remain stable. But that's not what's been happening. This is now a sharper pullback. It's already got that zigzag appearance to it. So you can see that classic. It's almost like the lightning strike zigzag. That's what they look like a bit. It now seems to be a case that the nervousness ahead of the US election is now seeing people going out there and starting to reduce risk. And I think this sell-off is increasing the nervousness and increasing that propensity to want to reduce some risk. But does this change the underlying technical structure? I think that's the key question that we need to be able to answer. And so let's look at that now. So as it stands, the ASX 200 is still above these rising moving averages. So I've got the 50 and the 100-day averages, and they're both continuing to trend upwards. Prices dipped below the 50-day, come back to the 100-day, but that in itself does not signal a trend change, because even in a bullish market, prices are going to pull back to these moving averages, even travel below them. That's not an unknown thing to happen for a bull market, to have these periodic tests below rising moving averages. We saw it recently in August. And if we can just compress this up a little bit, let me just fit that to the screen a little bit better. Go back here to this period here. Let's go back to this period during from the 2020 low through 2021, and this was a particularly strong rally. This was a strong rally we had off those lows, and just look at these pullbacks we got within the 50 and the 100-day. Several of them went below the 50-day, getting pretty close to the 100-day moving average, and this continued throughout for much of the rally. And Now, as I say, this was a particularly strong rally. Let's go back to another period which was choppier, which was an upward trend, but a choppier upward trend. A good example of that is back in the 2010s, 20 teens. So let's just step back a little bit in time to that period. So it's this period here through the 2010s and teens. And you can see there are a number of occasions where prices come back below these moving averages, but they continue higher. This is a choppy, it's an upward trend, but there's more volatility within it. And you can see it does happen. We get these brief pullbacks below. So I'm not suggesting we're going to get a pullback below the 100-day moving average now. It's just to say that the moving averages aren't like a rock solid line that prices can't pierce while the trend is in place. The key is that the overall momentum in the moving averages remains upwards, and it's when prices fall below the moving averages, and that's when I start getting more concerned. It's when prices fall below the moving averages start to roll over, and then price starts to consolidate beneath those moving averages. That's when I get most concerned. I'll show you an example from like 2022 is an example there. We've got moving averages rising, prices fall below the averages turn lower, we get consolidation beneath the average. That's when I start getting worried. This one resulted in another rally, but then quickly fell away, more consolidation below those declining averages, and then the downside came in. Another example, I'll just find you another quick example. Here's one here in 2015. Again, rising prices below the moving averages cross, turn lower. There's that consolidation below the declining moving averages. That's when the vulnerability comes in. So we're not there. We're not at that stage by any stretch at the moment. This is a pullback to rising moving averages. So let's not jump ahead of ourselves with worst case scenarios at this time. I think like now, like in previous times, I give the incumbent trend the benefit of the doubt. Most of the time, these pullbacks within upward trends, they stabilize and they turn higher, like we've seen before, like we'll see again. Whether this one does, we'll only know in time, but I think that's where the benefit of the doubt goes. If we just say every time we get these pullbacks and the market falls away for a week or two or more, or a month even sometimes, if we expect the worst every time that happened, and it'd just be really hard to be an investor. Would constantly be selling, would constantly be going to cash, and that makes it a really hard job to make money when you're doing that. I want to show you what I want to do now. I want to show you two key components of the local market, and those being materials and financials. So materials are largely the mining stocks, and financials, of course, the big banks. Starting with the materials, and we still have, like, we've got this impulsive rally from below the moving averages, above the moving averages. This is all on the stimulus measures and speculation coming out of China. So that's a strong bullish-like move. And then the price action since has been choppy. It's been overlapping. It's been pulling back to the moving averages in a very corrective looking way. So I'm viewing this pullback in materials as being a correction, not a trend change. So this is an important thing for the ASX 200. If the materials are holding well, it's a good support for the local, for the ASX 200. Coming across, looking at the financials, this is the Better Shares ASX 200 Financials ETF. So the big banks and other financials in there as well. And again, this remains in an upward trend. Nothing has changed from that perspective. We've got these rising moving averages, the 50 and the 100-day continue to rise, and price is still above the moving averages. Come back to the 50-day, but that's okay. That will happen. We can see this has happened a number of times. So whether this plays out like it has in the past, we don't know. But again, that's where my benefit of the doubt goes. It goes to the underlying trend until we have reason to believe otherwise. And this trend, of course, this trend is going to change at some point. But rather than trying to anticipate the change every time we get a pullback, going, oh, is this the one? Is this the one? Is this the one? And so on. Rather than trying to anticipate that change, as I keep telling you, I give that prevailing trend the benefit of the doubt, because I make more money by staying with a trend and staying with it for as long as possible than trying to get off after every peak, trying to predict when it's going to all end. That's just a hard game, because often the market will then stabilize and shoot off without you on board. For me, it's very much a case of using those wide trailing stops. So something below the 100-day moving average is what I'll use. Be usually wider than the 100-day moving average. So using those wide stops, try and see off those pullbacks. But in the event that it all turns and something bigger happens, well, I've got that exit plan. I think that's really important, having the exit plan. And that's something which a lot of people don't have. They just buy something and they hope for the best. But I think having a structured exit plan is a key to protecting capital when conditions do at some point change. Now, there are also some really important price action to have a look at in the small ords and the emerging companies. I'm going to jump to those in a moment. First of all, we're going to go to the US markets. I'm going to start including the US coverage within the ASX strategy session. And before I do that, if you're getting some value from this, please hit that like button. Please leave a short comment. Hey, thanks to the video. It tells YouTube you're watching. YouTube shows other people. So please do that. And now let's move over to our US market. So we're starting with the S&P 500. And it seems that the uncertainty around those US elections has finally caught up with the S&P 500 and the other US indices. I was saying last week that there was scope for several weeks of consolidation, maybe a retest of the 50-day moving average, but I wasn't expecting it was all going to happen in one day. It was something I thought could develop over several weeks. The Dow and the Nasdaq, they've got similar downside moves to the S&P 500 on Thursday. I don't think this changes. I don't think this downside move on Thursday changes the underlying trend, but I do think we should be ready for more volatility, especially over the next few days leading into next week's election. For me, this is all about, I think for now, I think it's prudent just at the moment, just holding off new buying. Most new buying, unless there's something exceptional to look at. But generally, I think it's a time just holding off buying and also exiting stocks which are hitting their exits and just cutting back risk a little bit where it's necessary to do so. I don't want to be going into a potentially volatile period, holding losing positions that I need to sell and hoping they'll bounce back. I'd rather just cut them ahead of possible further volatility and be done with them. Have some cash on the sidelines, be ready for when the next round of opportunities arise. But look, I think having said that, I think we need to also just keep all of this in perspective. The S&P 500, it's only 3% from its all-time high. So really, in the scheme of it, this pullback is just a blip. Maybe it turns into something larger, but at this point, it's just a small pullback from an all-time high. It's only come back to the 50-day moving average. Nothing unusual about that. We often see this type of price action in bullish trends, like we did in the ASX 200. Just looking at the period through 2020. Like you can see this series of all-time highs in the S&P 500. And there are plenty of these pullbacks to the 50-day moving average and below during that time. And so it's not an unusual thing to see. Another interesting period was 2016 to 2010. So let me just show you this. This is interesting too. So this is the not dissimilar to what we've had recently. It's like a 2 year rally. There was a nice strong 2 year stretch. Um, Look at all these are all new all-time highs. Market was making all-time highs for much of that period, but of course with all these pullbacks along the way. And what's interesting here, one thing I want to show you here, like just say, so this is, I'm going to zoom in on this period, which we have in August 2017. It was an all-time high. Market hit an all-time high after a long stretch of rising. And what would you have thought if we were looking at the S&P in August 2016, all-time high? Markets quickly come back a few percent through the 50-day moving average, back to the 100-day moving average. I don't know what the commentary was like at the time, but I'm sure there was lots of nervousness, as there typically is when these things do pull back. So it's not that dissimilar price action what we have now. So I'm not saying the current market is going to do what this market did, but it just tries to build some perspective around what we're currently seeing. And as history will show us, everyone settled down and the market started rising again. I don't know that that's going to happen this time. It'll be completely different, almost for sure. But just goes to show, just because you get a sharp zigzag, and it was a sharp zigzag pullback to a 100-day moving average, doesn't mean the whole thing's about to fall apart. Often market stabilizes. This is why I say giving the benefit of the doubt to the prevailing trend. And this, of course, doesn't mean being blind to risk by any stretch. I think it's important to know where your exit points are. And as I was saying, I don't think there's a hurry to take new positions at the moment. We don't want to act with complacency that it has to bounce back, but it's not about getting too jittery about the first signs of a pullback, because as we've seen through history, pullbacks often stabilize and move higher again. Now, I'm going to move on to the small orders and commodities in a moment. Lots of interesting things to look at there. But of course, that wraps up the free section. If you're not a strategy session member and you want to get into the gold price and uranium, copper, and the small ordinaries, and a couple of stocks I've got for you. Also, I want to look at the stock codes you might be thinking of. If you want to do all that, make sure you're a strategy session member. There's a link below. You can click that, come on in, cost you very little, and I think you'll get a whole lot of value for that small amount of money it costs to put the whole show on. Now, let's move over to let's go to the small orders.